This is recorded. This is recording. This is recorded. All right. So to do this the right way, let's, I had a suspicion last night. It's been a while since I looked at this, but I had a suspicion. And I just looked at something today to confirm my suspicion. I never can say goodbye, girl. There we go. That's the one I want. So as many of you know, or don't know, I'm all in on vibrational theory. I'm all in on sunspot theory. I'm all in on this belief, my understanding that humanity, because we are comprised of matter, the same matter that is responsible for the formation of the universe. We are learning more every day how entangled or connected that matter is on a subatomic level. That means the atoms we are comprised of behave the same way that the atoms on the surface of the sun and the moon and all of creation behave. We are connected. And Gann, WD Gann, William Delbert Gann, was one of the first people to identify the natural laws that govern the universe, govern our behavior. The ones that govern the universe govern our behavior. And so on this chart, one of the things that I started to take note of was, in my research, recessions and depressions would occur near solar activity minimums and solar activity maximums. Solar activity minimums and maximums. So this is a graph that charts how many sunspots are on the surface of this Helios, the sun in the middle of our galaxy, middle of our solar system, not necessarily the galaxy. And when you look closely, these sunspots emit miles high coronas, coronal discharges, not coronas, that's a beer. And that radiation emanates out into our environment. Humans, as we've learned as recently as last year, are sensitive to very small changes in the Earth's magnetic field. We have a sensory system, a sense system, brain-based, neurologically measurable, that can detect when these events occur. Think of it like an internal thermometer, Sean, only it measures the density of the electromagnetic field around us. Well, long story short, if you look where the recessions occurred, and that's where these lines are. If you look where the recessions have occurred, you'll notice, Mike, that the overwhelming majority of them, when the sun is behaving normally, occur near the peaks, Sean, of solar sunspot activity. That is to say, sometimes there's a few spots and then the thing fills up with spots and it maximizes. And then it goes back to being quiet. Okay, everybody with me so far? There's a correlation between solar activity and human psychology. That's undeniable, inarguable. So there's a unique phenomenon that occurs that I identified last time around. And you'll see right here, Earl, there's this threshold right around 100 sunspots, 100, 125. And all these other cycles, Sean, appear above, get above that activity level. But the time that they don't, the moments in history that they're unable to move beyond that critical level, Earl, do you notice how the recession occurs at the inverse of the cycle? It occurs at the minimum. It flips. Positive and negative flip to negative and positive. And what I believe happens, and again, this is a theory. I'm not skilled or trained in this. I'm only basing this on the conjecture of what I've seen so far, but I think it's close. What I think happens is, I want you to picture this as a pressure vessel. And there's a place where we can fill up the tank. But Earl, up here is a release valve. And what happens normally is the tank is set to expel the excess gas somewhere around 125 to 150 psi. And so we fill it, and then it goes psss, and the tank lets out its gas. But when the cycle goes through and we don't fill it up all the way, Earl, it continues to fill up until the next minimum. So if we get to the peak of the cycle and it's below 125 or so, humanity hasn't been shaken or filled with enough Red Bull to climax behaviorally and crash. How many of you guys have, ate a lot of junk food, a lot of candy, drank too much sugar, or you have a niece or a nephew or a granddaughter or a grandson, and they get all hopped up on birthday cake, and then there's that video of the kid who's asleep in his own icing. Can you picture that for me? Well, what happens is that when solar activity is at a minimum, there's no release. And so the pressurization continues until here. And this is where the release occurs. Now, the best evidence for that is what happened in 2008. Because the sun is historically quiet. You see here, Earl, how the majority of the stuff is, again, at that 125 level in 2000, 2001, Tom. The worst financial crisis in modern history is right here. So there's not enough pressure in the tank right here. And it continues, we continue filling the tank. Psst, psst, we're filling the tire. Psst, 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 psst. And what happens to markets? They collapse. Okay, now I want to show you something. Hang on to your booties, boys and girls. You are right here. You are right there. Now, this isn't a graph that I drew. This isn't a graph that my computer program made. This is the world around us. It's today. What happens when the tank explodes? What happens when the pressure relief valve goes off? I haven't been paying attention to this because I was waiting for the peaks. Now, oh, sorry, we're back here. There was no crash here, was there, Tom? 2014, 2015. Was there a crash? Do you guys see the level right here? The maximum was 100. And it barely made it to 100. Where's most of the activity? 60, 70. So here's the thing. Why do markets keep going up? Why are they still going up? Because internally, our psychological bladders never got enough pressure to activate the release. And so it's been a free for all. The kids have been up, Tom, all night. All night. Drinking Pepsi. Sucking on rock candy. Swinging around the ceiling fan, watching Steven Spielberg movies. Stephen King movies, probably worse. Now remember, this is it's so important that you get this. It's identical to what's taking place right here. Let's blow it up. And then we'll pull this down. Draw. Here's 100. And there's the recession. Here's 100. And there's the recession. The last recession, I'm going to say this again, the Great Depression was right here. That's where they've been. Everybody with me so far? Is this worth talking about, or do you want to go back to the charts? We've got 20 minutes till the open. I've got a couple more things I can show you if you're up for it. Now, here's the problem. Everyone knows that the next one is the big one. The next one will dwarf this one. All they've been doing from here to here is printing money. The entire economy is based on an illusion. The Fed has been injecting hundreds of billions of dollars into lending markets. And a very, 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 very narrow segment of the world has enriched themselves in that span of time, in the last 8 to 10 years. The primary portion of wealth created went to a very small number of people. There are no fallbacks. Interest rates can't be raised. Inflation, inevitable, all of these things. There is only one way to make money if you are the elite. There is only one place that you can go to get wealth when the nation has none. No, there is only one place you can go to get wealth, where everybody agrees to give you stuff that they don't even have yet. That's right. The war, boogeyman. What happens in a war? How do we pay for war? Where does the money come from? We borrow it hard as possible. We borrow on future taxes. So what stocks should start to go up right around now? What do you think the elite have been investing in? Because this war didn't come out of nowhere. This was planned. Any defense stock, Raytheon, Boeing, Grumman, Halliburton, right? All of these companies that are publicly traded that are involved in coming back in and building the schools and the houses and all these things. Any kind of military complex is where you should be looking right now. Any kind of defense supplier. It's inevitable. It is a psychological inevitability. They have to go to the well. There has to be a crash. Has to occur. They're not going to continue to buy at all-time high prices. Let's take a look. Okay, so the science is fairly sound here. I've been through a couple of these cycles with you guys, so I'm more and more confident in them. I never can say goodbye, girl. Now, new chart. Let's go ES0320. We'll load a daily chart. And we'll load a bunch of days. There we go. No, we don't want that. Yes. I never can say goodbye, girl. No time warp. Remove. Okay. 2008. That goes back a ways. Let's go weekly. How about that? Data series. And boom, boom. Does that get us farther enough back? Yeah, there we go. So 2008, 2009 is the last solar cycle. We'll go ahead and we'll put that right there. So we still have this graph on our minds, right? Here's 2009. In we go. Okay, now the next peak where it's supposed to slow down. You see the double tap right here, Earl? There's one at the last Q4 of 11/12, and there's one at Q1/2 of 2014. Okay, so if we come over here, I want you to notice that there's some selling behavior. Okay, so let's come over here. Here's 2012, and here's 2014 into 2015. So I'm going to just draw. Here's where things start slowing down, Earl. Arguably right here is when that first crash comes in. It's so small, but right there. There's 2014, 2015. There's the first, and then it slows down, and then Earl, and So if we look at this chart, solar bottom, solar top 2. Solar top 1 was when? Oh man, go back. Current solar cycle was Q1 2012. Yeah, same thing over here. Here's 2012 coming into that. Solar top 1. This area right here. You see the same womps? Womp. Guess where we are right now? Hang on. Let's go back here. 2000. The crash occurs 2008. Which is over here. Sorry. We are now right here. So what's interesting to me, why is this interesting to me? Okay, so right here is just before the crash. There's a series of double tops over here. There's actually 3 runs. Here, let me break this down for you. Why don't you take a look with me? Come with me and we'll be in a world of pure imagination. Okay, see the run up? That's 1, 2, 3. And the third one is a new high. 1, 2, 3. Oh man, October, November, December, January. Oh, that's worth noting. Let's note that, shall we? July, October, when's the next peak? December 14th. Just look at where the highs are coming in, guys. The last high in this cluster of pushes, you have the one on February, July, October, December 14th, coming into the solar bottom before the crash, when the valve is going to explode. Okay, July, October, December 14th. Come with me and we'll be April, July, September, October, it's right there. What did I say, December 14th? Here's December 13th right here. One last hurrah. There's December 13th right there. That looks like a weekly doji candle. As we come into the solar low, what are we seeing? This right here is not normal. So guys, we need this relief. The last time we had this, we fell let's just draw a box. We fell from here to here. Man, you can't make this shite up. Well, hell. There's something relevant about that distance, isn't there? There was a plunge into this level once before. In fact, if we come across what is this, 2350 to 2300. So let's go back. Holy cow. That's where we are now, man. And if we just fall to that, it will be a level that we retraced to and tested once. And it will be 3,300 to 20, it'll be 1,000 point drop in the ES. Coming into the solar bottom right here. So we had the July purge, we had the October purge. This is the December 14th purge. If we come back and look over here, just one more time, guys. What's scary to me, and again, this is conjecture, but it's valid, I believe. In the prior examples of this, we had a high, and then Earl, we had a higher high. The third one was too weak. The third one was too weak. Tom, you noticed there was a drop into December 14th. They were already starting to get off the ship. They were already loading the lifeboats December 14th into January of last year. When's the next high occur? May 23rd. The bottom is March 21st. So December 14th into March 21st is how big of a drop? A $287 drop, or a $2,000, almost a $3,000 drop in the Dow. But here's what's frightening. They know this. Don't tell me they don't know this. Guys, look what they did right here. Tom, it's straight up. They pulled everybody into this, man. Everybody's in this one on that breakout. So when you have that, yeah. All right. It is what it is. It is what it is. But it has to stop here. I want to just reiterate that point. I want you to look at it on the screen. I want it to burn into your retinas. We are here. It is happening. This is not an alarm. So don't be surprised when you see things that shake investor confidence. I'm not being conspiratorial. I don't pretend to understand it all. But I do know that's when the stuff starts to hit the fan. Hey, here's a question. Maybe we can take a look at something here real quick. Market is open 931. Welcome to the chaos. Obama, Pakistan, drone. Dates. Remember when Obama bombed a bunch of people in Pakistan with a bunch of drones? He just started messing with people. I wonder when he did that. If someone wants to research that, I'm running out of time. All right, so here's something I see. Can you guys see when Obama starts really launching missiles from America into other countries? I'll blow it up. Yeah, I had a suspicion. If you just get into this a little bit, you'll find the answers. And then we'll get into our trades here. So 2004, there's 1. 2005, there's 3. 2006, there's 2. 2007, there's 4. Earl, when does he start to ratchet it up? It increases by a factor of 10 in 2008 and 2009. Let's come back over to our chart. So there's an increase. All right, so let's go ahead and we'll put a vertical line here. 2006, 2007, 2008. Let's put the number here. Ready? 2, 4, 36. I swear to God, you can't make this. You can't make this up, guys. We are here. All right, that's the end of the class. We'll see what happens.